And are we ready to start?
Yes, I'm just going to let everybody in.
Okay.
Let me just wait like 15 more seconds
All right.
and then I will get started.
All right. So I'm going to stay on camera for the very first introduction, and then I'm going to go off while I'm doing the presentation, and I'll come back on at the end.
Okay, sounds great. Okay, we'll get started. Good afternoon, everyone, and welcome to Navigating Pennsylvania Taxes and Regulations for Farmers. I'm Cindy Nellis here at the Penn West Clearing Small Business Development Center, and we just thank you so much for joining us today as we celebrate National SBDC Day. So our webinar today has been designed to equip you with the essential knowledge and practical tools necessary to navigate the complexities of tax and regulations affecting your operations. We will begin today by defining what a farm is within regulatory context, and we'll continue with information to help establish a foundational understanding crucial for determining eligibility for various tax benefits. Following today's webinar, you will be receiving the presentation slides and, of course, this recording. Before we get started, just a few reminders. You, as participants, have been muted and your video disabled. If you have a question for our presenters, please enter them in the Q&A. We have a team of experts here to help address those questions throughout today's webinar. If you have a question for me, I just ask that you use the chat window and I will be able to address them there. So before we turn it over, I'd just like to introduce you to the Small Business Development Center. We are a grant-funded program with a mission to help businesses start and grow and succeed. We provide education, information, and tools to help our businesses make better business decisions. We do this through our business consulting services that are provided at no cost and are confidential. We also offer training seminars on a variety of topics that target the needs of small businesses. And to us, a small business is generally defined as a business with less than 500 employees. And finally, we use our funding to provide access to database information and resources related to conducting industry and market research and financial analysis to implement marketing strategies. We partner with many economic development organizations to help connect you, our business owners, with many more resources to help you as you start and grow your business. Whoops. I'd like to highlight our tax series that has been developed in partnership with the Pennsylvania Department of Revenue. These monthly webinars provide information on 4 key areas: getting started with MyPath, Pennsylvania taxes for new businesses, sales tax basics, and withholding basics. I'll be sending you this flyer for you to consider attending. These webinars are also recorded, as is today, and are shared with all who are registered. And then finally, in Pennsylvania, the Small Business Development Center Network includes 15 centers, all located at institutions of higher education. We are a part of the America's Small Business Development Center Network, a national network that enables individuals and businesses all over our country to access our program services right in their neighborhood. If you're not a client, we'd love to have you connect with us to receive assistance and have access to the many tools and resources we have. Here's our network website, my contact information. We look forward to working with you on starting and growing your business. So with that, I'd like to introduce you to Donald Bianchi. Donald is a graduate of West Virginia University with a degree in business administration and has been a certified public accountant since 2002. He's worked with the Commonwealth of Pennsylvania for over 25 years. He started with the Commonwealth as an auditor with the State Treasurer's Office in 1993. He joined the Pennsylvania Department of Revenue Bureau of Individual Taxes in 2005 as the manager of the Personal Income Tax and Property Tax Rent Rebate area. Then in 2012, he moved on to the Bureau for Motor and Alternative Fuels Taxes. And in 2014, he was named the director for the Customer Experience Center. And in this role, he's responsible for the oversight of the department's customer service and collections phone units, as well as the training of Department of Revenue staff members and the outreach and education to customers. Great expert that we have here, Don. We're so glad that you're with us. And I'm going to stop sharing so you can share yours.
All right. All right. Let me know that you can see my screen.
Looks great.
All right. So, thank you very much for the introduction, Cindy. I want to say congratulations and happy SBDC Day. You guys do a wonderful job and we love partnering with you. So I'd like to start off by welcoming everyone to the first Pennsylvania Department of Revenue and Small Business Development Center presentation on taxes for farmers. Pardon me, I'm getting over a little bit of a cold, so it's good that I'm not in the room with anyone. Um, while I'll be covering a lot of different topics today in relation to taxation for farmers, I want to make a note that I'm only covering these materials at a basic level. So the department has a lot of other information. As Cindy mentioned, we do a monthly webinar series, and I would encourage you to check those out for more specifics on certain subject matters that may be of interest to you or applicable for taxes that you may be required to pay or collect. So, and if there's anything on that you would like a more particular topic on from what we're talking today, I encourage you to work with your small business development coordinator so that we can work together with them to potentially create other material to put out to you as our customers. So please keep that in mind. With that, I am going to turn my camera off so that we don't get overly distracted. Um, Cindy talked a little bit about in the introduction of what we're going to talk about today. We're going to talk about farming as it's defined for tax purposes, the typical taxes that a farmer is potentially going to be exposed to. We're going to give you some tips for success. And if we have time at the end, we'll talk a little bit about what your rights are as a taxpayer in relation to what our rights are as the government entity that administers taxes. So let's start out with what is farming? For Pennsylvania tax purposes, farming includes activities conducted as a regular business, which include the production of food products for human consumption or the production of non-food products. I know that is super specific, isn't it? So the production of food products for human consumption includes the production of food crops and breeding and raising of livestock, bees, or poultry. It also includes the production of vegetables, vegetable plants, fruits, or nursery stock, the propagation of game birds for commercial use by holders of propagation permits, and the propagation of fish or other aquatic animals for commercial use as a food or food byproduct. Now, the production of non-food products includes the productions of flowers, trees. This would include Christmas trees, plants, and shrubs in fields, in a nursery, or in a greenhouse. The propagation of fur-bearing animals, but not pets, and the propagation and raising of horses used exclusively for commercial racing activities. So once you've established your business and you know if you are considered a farmer, and don't worry, I'll be going a little bit over some other pieces of farming in more specifics through the presentation, it's important to understand the typical tax requirements that farmers are exposed to. The first generally should be aware of potential sales and use tax obligations, along with exemptions they may qualify for as a farmer. It is important to understand these laws so that you know what you're responsible for when you're purchasing items for your farming business, as well as when you sell items. Additionally, a farmer could have motor and alternative fuels tax or motor carrier road tax or IFTA obligations. And lastly, farmers should always be aware that they still need to file and pay their personal income taxes on an annual basis, which um, that personal income tax obligation for filing is coming up in a little bit less than a month. So let's talk about each of these items in a little more detail, and I'm going to start with sales tax. Now, there are many situations in which farmers must purchase items to run their business. This means it's important to understand when you may or may not owe sales tax on items that you are purchasing. So, in general, sales tax is a tax paid on the purchase of certain goods and services. The PA sales tax rate is 6%. However, there is an additional 1% local tax imposed on purchases made in Allegheny County and a 2% local tax added to purchases made in Philadelphia. Usually, the law requires the seller to collect the tax from the consumer at the time of purchase, meaning that if you owe sales tax, you normally pay it when you buy the item, and the seller handles the collection of that tax and the filing and paying of that tax with the Commonwealth of Pennsylvania. Now, generally, the purchase of tangible personal property is used predominantly, tangible personal property to be used primarily and directly in farming operations is not subject to sales tax. And I will talk a little bit more about exemptions in a few slides. The purchase and also the purchase of repair and replacement parts for machinery equipment used predominantly and directly in farming operations and the labor charges for the installation of such parts is not subject to sales tax. Foundations used to support machinery equipment and parts directly and predominantly used in farming are also exempt from sales tax. However, tangible personal property purchased to construct, repair, or maintain real estate or farm equipment is subject to tax. Real estate includes buildings such as houses, garages, barns, greenhouses, storage facilities, roads, dams, spillways, and fences. But it does not include piping for irrigation or livestock water supply, and it does not include drainage tilling. Now, items purchased for farm administration, selling and marketing, or exhibiting safety activities and land conservation programs are not considered farming activities and are subject to Pennsylvania sales tax. Additionally, services supplied by a help supply vendor are subject to sales tax. Now, when Pennsylvania sales tax is not charged by the seller on a taxable item or services delivered or used in Pennsylvania, the consumer is required by law to report and remit use tax to the Department of Revenue. The use tax rate is the same rate as sales tax, 6% through the entire state, an additional 1% for items purchased and delivered to Allegheny County, and 2% for items purchased and delivered in Philadelphia County. Now, many individuals believe they save money by making tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit from the Department of Revenue. Since our tax assessments include interest and penalties on top of the tax, businesses not following the law can increase their operational expenses by not voluntarily addressing their use tax obligations. Now, you might be asking yourself, uh, why is it important for me to pay use tax obligation? Well, it comes down to being a matter of fairness. Pennsylvania business, which I'm assuming each of you who may be operating a farm are running a Pennsylvania-based business. To those who are employ and reside in the state of Pennsylvania. So these businesses, they're employing children, family members, friends, and so on. If we do not purchase from those, or if the sales tax isn't charged, it actually puts the out-of-state business at a 6% competitive advantage over our local businesses. Now, that 6% advantage when a person is purchasing, they're just thinking, I don't have to pay sales tax, so I'm going to save money. But they legally owe use tax. And use tax is there to kind of level the playing field so that the money that is needed to support Pennsylvania infrastructure, Pennsylvania government prevents government services that are provided to our citizens, that funding is there to continue to provide those services. Now, um, from an enforcement standpoint, the Department of Revenue receives information on purchases where use tax is owed and wasn't paid, and we will assess the purchaser not only the tax but penalty and interest. Now, to learn a little bit more about when you need to file and pay this, I'm going to show you on the next slide. But in general, the filing, if you already have a sales tax license, you can file your use tax on that. If you do not have a sales tax um, license, you can go on to MyPath and you can file that way. But we do have a brochure out there, and I'm going to give you a lot of different brochure numbers. This is REV 935. It's use tax for businesses. So now, businesses who are registered, as I said, for sales tax can remit it on line 6 of their sales tax return. Businesses with ongoing use tax liabilities that are not required to have a sales tax license should apply to the department for a sales and use tax account through the MyPath portal. Businesses that infrequently come across the use tax obligation may use the department's online use tax payment option right from the MyPath homepage, which is a non-logged in function. And if you're wondering about what is MyPath, MyPath is our online portal where individuals can file and pay most of their Pennsylvania taxes. And that is located at www.mypath.pa.gov. Now, for those that just have a one-time use tax obligation to pay each year, you can still use your PA 40 annual income tax filing and report that in that use tax obligation on line 25. Now, a hot topic for all of you will be exemption certificates. As a farmer, there may be times that you do not actually have to pay sales tax or use tax because you would qualify for what we call a sales tax exemption. We recommend you familiarize yourself with the department's forms REV 717 and REV 1729. The first is use tax, general basics, filing obligations, and so on. The 1729 is specifically designed for the farming community to explain a lot of the stuff that I'm going over today. That 1729 is in the process of being rewritten to include additional information that we feel is important to have out there for farmers and to kind of explain a lot of what we're going over in plain language so that it is easy for everyone to kind of understand. So the first step to getting an exemption is downloading and completing the REV 1220 form. And I'll bring that up in a second. That form is available on our website at revenue.pa.gov. And in the search feature, just type in REV 1220 and you will see an exemption certificate. The 1220 form is used by a purchaser, which would be most likely you as the farmer, to be given to the seller to document the reason sales tax was not collected on the sale of tangible personal property that is normally subject to tax or a service that is being provided to you that would normally be subject to tax. So on this slide, you're going to see a copy of what the exemption certificate looks like. So when you're purchasing items of tangible personal property or services normally considered taxable under an exemption, you're going to get this form and you're going to fill this out. The farmer making the purchase must complete the exemption form and provide it to the supplier. Remember that a farmer is not required to obtain a sales tax license number or submit a sales tax license number to the seller in order to receive a sales tax exemption on the purchases of the property or services if they're being used directly in farming operations. And then if properly completed and when accepted in good faith by um, the seller will not collect the sales tax on the sale of that item to the purchaser. Now, there are a couple important reminders for the exemption certificate. The first is there is no generic business exemption. Many people think just because they are a farmer, they are tax exempt. That is not the case. So, when completing the form, the reason for why the property or service is exempt must be filled out. I'm going to zoom in on that section of the form in a minute. The form must be signed and dated by the purchaser in order for it to be valid, and that is down in here. The seller accepting the exemption certificate should be aware that a hard copy of the exemption certificate must be kept on file and should show both the front and back of the document. The documentary evidence of the specific purchase must also be retained by the seller on these transactions. For this, we just suggest that the seller staple the receipt or the invoice to the 1220 so that it is on file whenever or if ever the seller's operation is audited by the Pennsylvania Department of Revenue. So again, something to just kind of keep in mind. So now we're zooming in on the form a little bit, and I'm going to talk about a few little areas here. So let's take a look here, and right here in number 1, where it says the property or services will be used directly and predominantly by the purchaser in the purchaser's operation of, and this is where you would write farming. And here are the few categories that qualify for this exemption. And again, you just put farming in there, check this. You will fill out the vendor's, the seller's name and the street address. They could fill this out themselves if you're presenting it to them. And then on the bottom of the form, you will put your information down and you will sign the form. Now, an exemption certificate is required to substantiate all tax exempt purchases. Now, you hear me talking about these purchases, but I also want to just slip into sales. If you are selling items that would be considered taxable for Pennsylvania sales tax purposes, and you're selling them to another farmer for farming activities or to a business that is taking them for resale, and you're not charging them the sales tax, you would need to keep a copy of the exemption form they present to you in your records. So I just want to make sure that you understand that this kind of goes both ways. And we can cover that a little bit more we do cover that a little bit more in some of our other webinars that we do with the SBDC. So I'm also going to tell you about this little area here, where it shows that the Pennsylvania Tax Unit Exemption Certificate used for one transaction and a blanket exemption certificate for multiple transactions. So let's say you go to the same supplier all year long, okay? And you give them an exemption certificate with your first purchase there. You can continue to use that same exemption certificate if you've checked the blanket exemption form on this, and they can continue to trust that certificate in good faith. Now, the place where you purchase may require you to bring an exemption certificate every time. That is their preference of how they want to do that to keep their records clean. But we're just letting you know that you can use this certificate as a blanket just in case the seller does accept that. Now, the one thing I will tell you, and I like to say to everyone, is if you change up your demographic information uh, or your address or whatever else that you list off for yourself at the bottom of the form, then you're going to want to provide a new exemption certificate when that information changes. But if it is the same and the seller will accept it as a blanket exemption certificate, you can use it as such. And I will also like to take note right now that if you review the contents of the REV 717 and the REV 729, you will notice there are listings in both those documents of many items that are not taxable for sales tax purposes. So you would not be required, if purchasing those items, to submit an REV 1220 exemption certificate. So we just covered when a farmer must either kind of pay or not pay sales taxes. Now let's look at when a farmer needs to collect sales tax because they are selling a tangible item. Again, it's important to understand that there are certain items that are taxable and there are non-taxable, and the REV 717, which we have a picture of up on the slide here, is a great place to start with that information. As a general rule of thumb, when an item is being sold for human consumption, they are usually not taxable. But if items are being sold for decoration, they are taxable. So, as my father explained it to me when we had a convenience store, for an item, food related item that is a necessity of life, you are not usually charging sales tax on it. So, um, and then in the REV 717, there is a section, it's section 8 of the document that specifically outlines the taxability of or non-taxability of farming supplies and equipment. So now PA law does generally state that the sale of prepared or ready to eat foods or beverages to consumers for their immediate consumption on or off premises from an eating establishment is taxable. However, there is specific legislation outlined for farmers markets and stands at farms. The sale of prepared foods such as pasta salads, beans and rice, and other potato or vegetable salads from a vendor in a farmer's market is not subject to sales tax unless the food constitutes an entire meal or is specifically enumerated. This is covered under section 204 29 of the Tax Reform Code, um, and provides that the sale of retail of food or beverages is not taxable uh, for sales tax, including food sold at a farmer's market, unless the food is sold is a complete meal or is a sandwich, food from a salad bar, hand dipped or hand served ice based products, including ice cream and yogurt. This would also include hot soups or hot pizza or other food items, brewed coffee or brewed beverages or soft drinks. Now, items sold by weight for human consumption, such as potato salad, are not subject to sales tax. Um, you're going to wonder and say, well, wait a second, where does this come in with the salad bar? Um, that there is a little bit of confusion maybe to the normal everyday person, but again, something coming off a salad bar is being deemed as a meal and ready to eat is the way it's generally been explained to me. Um, but so if you're doing food by weight, such as potato salad, it is not subject to tax. If you sell a cold burrito or stromboli, that would not be subject to tax. However, if you serve that burrito or stromboli heated and basically kind of ready to eat, it would be considered a hot food item and it would be taxable. So the department has various information about this and various letter rulings for your reference if you ever need it. So please check out information on our website at revenue.pa.gov. So sales from a stand at a farmer's house. In most cases, this is going to include fruits, vegetables, honey, jellies, jams, and baked goods. These are not subject to state sales tax. However, items like pumpkins and gourds that are sold for decorative purposes. So they're sold as a decoration, mostly probably in the fall holiday season. Those are subject to sales tax because they're not for human consumption. They are being used as a decoration. So that is important to remember that. So once you have determined whether or not you need to collect sales tax on items you're selling, you will need to obtain a sales tax license from the Pennsylvania Department of Revenue. The license performs many functions, including demonstrating to the public that the business is a duly licensed agent to collect sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth of Pennsylvania Department of Revenue to remit the money immediately, which usually means within 30 days of it being collected. To register and obtain a sales tax license, it's very simple. You need to complete the online business tax registration application, which can be found on our MyPath homepage. If you do not have a pre-existing business account, you would go through the entire registration process. If you already have a business tax account registered with Pennsylvania, you can simply add a sales tax license and you should be able to log into your business tax account with Pennsylvania and use the business registration hyperlink uh, that is available to you. And the reason in going through the registration, if you're just adding something, is if you do it through your online account, then you don't have to re-input all your business information to the application since we already have it on file. And we have found that when many people try to do a whole new registration process, they sometimes put their address in or their business name in differently than what they did for the other registration, which makes us look as if it's two businesses in some cases, and that can cause some record keeping issues in the future. So again, if you can log in and do it, that is the way you should do it. Now, if you're an entirely new business in Pennsylvania, we recommend that you visit www.business.pa.gov, and it will take you through all the various registrations needs that you may have, not only for the Department of Revenue, but for other Commonwealth agencies that may regulate the business that you're in. Now, since you're on the SBDC webinar, I'll take a shameless moment here to plug the SBDC coordinators who are there to help you. They're amazing people that will really help you to navigate through all of the things you need to do when starting your business up or expanding your business. So please keep in mind that the SBDC is there to help you. So once you've signed up for sales tax and are ready to make some sales, you're going to need to know how to collect and remit sales tax to the department. To assist you with learning more on the collection remittance of sales tax, we do have a webinar in July with the SBDC that will explain this in the future. To save some time and to get through the other materials I have today, we're only going to kind of hit this at a very basic level. So for now, let's just give you some general rules of thumb. Okay. Filing remittance occurs at different intervals determined by the department depending on the size of the business and the volume of the sales of the business. Now, if you are a new business registered for sales tax, you're going to be set up to file and pay quarterly. Okay. The department, if you're doing a lot of business, may change you up to monthly, um, or or if you're not doing that much business, you may change down to semi-annually. Again, that will happen after the first year. The due date will always be the 20th day of the month following the last day of the reporting period. So that will always, on a quarterly basis, it'll be the 20th of the next month. There is Form REV 1819, REV 819, which is available on our website that shows you the due dates and designated for each designated filing frequency for easy reference. But once you have your MyPath account, you'll be able to set reminders, due date reminders, so that it will shoot you off an email or provide you a notification to let you know when your sales tax return is due. Now, Local sales tax and state sales tax are filed together on one report. So once you're registered, you will declare the additional monies that go to Allegheny County and Philadelphia counties on your Pennsylvania return, and then we will take care of getting those funds off to their respective areas. Now, one thing that a lot of people are not aware of, but is very important, is that once you're registered for a sales tax license, you may have a period where you're not actually selling anything, but we still require you to go in and file a zero return, basically saying that you had no sales and that no money is due to the Commonwealth. You have to do this to stay compliant because once we set you up on a filing frequency, we expect that you will be filing a return and remitting funds to us on each of those filing periods. So, please keep that in mind. Now, when you file and collect sales tax, you also get a discount if you file and pay on time. But if you file a late return, we do not give you a discount. That is basically a little bit of money back in your pocket for helping us to collect in your remission of the sales tax. And if you are late in filing or paying, penalties and interest will be added to the return, uh, and we will issue an assessment to you to collect the additional taxes. Now, something important to know about sales tax, it's considered by us to be what we call a trust fund tax. As the business owner is basically holding that money in trust until they're remitted to the Commonwealth. It's important to remember that these taxes must be reported timely and in full to the Commonwealth, and that you're simply holding them. These funds cannot be used to cover business or personal expenses, and we do suggest that you keep those funds in a separate bank account until you're ready to remit them to the department, because the last thing you want to do is fall behind in your filing of your sales tax obligation, because you really don't want one of our phone agents contacting you. You don't want one of our field agents coming out and visiting you and going to collect it for money that was paid to you by the end using customer, and you're just holding it and have to remit it off to Commonwealth of Pennsylvania. All right. So next we're going to talk about motor fuels taxes. And as you may know or may guess, this obviously comes into play when you are using a motor vehicle in relation to the agricultural industry. When I talk about motor vehicles used in agriculture, there are two separate Pennsylvania agencies that handle the administration of motor vehicles. The first is the Department of Transportation, commonly known as PennDOT. They handle the titling and registration of the vehicle. Their website has a lot of good information on it. You want to go out and check out what they have. And you can get pretty much anything you really want to know about registering the various vehicles that may need to be registered. I'm going to go over that just in a few seconds here. The other agency, obviously, is the Pennsylvania Department of Revenue, and we handle the motor and alternative fuels taxes, the motor carrier road tax, and the international fuel tax agreement taxes. And I'll go over those in a second. So when we talk about agricultural vehicles, we generally like to discuss them in terms of plated, non-plated, and ATV or all-terrain vehicle. Agricultural vehicles, which are required to be plated and registered under the vehicle code for highway use, are subject to sales tax. That means when you purchase the vehicle, you're paying sales tax on that purchase price. This means that means the purchase of all trucks intended by the purchaser to bear commercial or farm truck registration plates is subject to sales tax at the time of purchase. A plated vehicle, basically think of it as used for Pennsylvania roadway use, and these vehicles may not use dyed fuel at any time for any reason. And I'm going to dive into dyed fuel in a little bit more in a couple of slides. A non-plated farm vehicle may use dyed fuel, which is tax-free purchase of fuel. These vehicles should have a special agricultural stamp and they would not have an annual inspection sticker like your personal vehicle would. And they also cannot be driven at night. And there is a mileage radius restriction for where they can be driven. And PennDOT has all that information available out on their website. Now, as for all-terrain vehicles or ATVs, these are required to be registered with the Department of Conservation and Natural Resources and are also subject to sales tax, with the exception of ATVs that qualified for multi-purpose agricultural use vehicle. A multi-purpose agricultural vehicle basically means a motor vehicle exempt from registration in accordance with PA Code 75, which is used exclusively for agricultural purposes and only incidentally operated or moved upon a PA roadway or highway. So the multi-purpose agricultural vehicle must be operated for the benefit of or pursuant to the operation of a farm owned and operated by the owner of the vehicle or a business whose enterprise and activities are considered part of farming. So now let's talk about motor and alternative fuels taxes that are used to propel vehicles on the highway. These taxes are imposed to fund highway and bridge construction, maintain and improve roads, provide revenue for state police, highway and patrol operations, and other Department of Transportation activities. The oil company franchise tax, which is imposed on all taxable liquid fuels, gasoline, gasohol, undyed diesel, and undyed kerosene. Um, the tax rates for these are subject to change yearly based on the wholesale average price of the product sold in Pennsylvania. And that tax, which is usually loosely referred to as the gas tax, changes every year so that we can ensure that PennDOT has the funding it needs to maintain the Pennsylvania roadways. The good news here is that unless you are a registered liquid fuels or fuels distributor, you just pay this tax at the pump when you purchase the fuel. Alternative taxes are a little bit different. This is imposed on fuels used to propel vehicles on public highways that are subject to alternative fuels tax. Alternative fuels include natural gas, compressed natural gas, liquid propane gas, liquefied petroleum gas, alcohol, gasoline alcohol mixtures containing at least 85% alcohol by volume, hydrogen, hethane, electricity, and other fuel not subject to tax under the liquid fuels or the oil company franchise tax. Now, an alternative fuels dealer or user, keyword here is user, must remit the tax. Reports and payments are due by the 20th of each month for fuel used or sold in the preceding month. And if you own and operate an alternative fuel vehicle, which for most people, if you're talking in normal everyday highway use, somebody owns an EV vehicle or a natural gas or a compressed gas vehicle that is used to travel on Pennsylvania roadways. We do have more information on the Pennsylvania Department of Revenue website about your filing and payment requirements. Now, dyed fuels are not subject to federal state taxes that are due on clear diesel. The federal government instituted a dye fuel program as an easy way to tell whether untaxed fuel intended to be used as home heating oil or for off-road uses was being used in diesel-powered vehicles. By dyeing the non-taxable fuel red, the federal and state authorities can immediately see if no taxes was paid on the fuel that is in the tank of a vehicle that they're testing. Whenever dyed fuel or dyed kerosene is purchased in Pennsylvania, they are purchased tax-free. Therefore, farmers are permitted to purchase and use high sulfur dyed diesel and kerosene in diesel-powered farm equipment that is used exclusively off-highway. For example, farm tractors, harvesting equipment, and so on. They can also purchase and use low sulfur dyed diesel and kerosene in diesel-powered farm equipment and trucks used on and off highway that carry a current biannual certificate of exemption as provided under Section 1302 of the Vehicle Code. A diesel powered truck bearing a farm vehicle registration must use undyed diesel and kerosene to operate on public highways. As Cindy had said, I worked for the Bureau of Motor and Alternative Fuels for a short period of time in my career, and the use of dyed diesel by those in the agricultural and farming communities in their trucks is a high point of tax evasion. So we just tell you don't use it in your vehicle if you're using it for highway use. One basically one drop of it in there taints the entire tank. Uh, Saying that, well, I just used a gallon of it for an emergency isn't going to get you out of the citation or fine, which can be up to a equal $1,000 per vehicle. So it's best not to use dyed fuel in a vehicle that is going onto Pennsylvania roadways. And the Department of Revenue and the federal government do set up dyed fuel testing stations at periods of time um, to test vehicles. So just please keep that in mind. So it is important to note that there is an available statutory refund or reimbursement for cleared diesel fuel that you may purchase and tax paid on it and use it at your farm. Uh, that is used in agricultural power takeoff units. A power takeoff unit is a mechanism that attaches to an on-road vehicle, but is used for off-road applications. And the example that we usually use is like a manure spreader. The machine runs off the clear diesel diverted from the truck's propulsion tanks, and the farmer can claim or is allowed to claim a reimbursement for that fuel used in the power takeoff unit. So if you purchase 50 gallons of taxed diesel and have it in a holding tank at your farm, and you use 5 gallons of that to power a power takeoff unit, um, on a piece of equipment, you can go back to the Pennsylvania Department of Revenue and request a refund of the tax paid on those 5 gallons. Now, other fuel used for agriculture and farming purposes, not in the power takeoff unit, can also claim a refund or reimbursement, but that is not done via the Pennsylvania Department of Revenue. That is done by the Pennsylvania Treasury Board of Finance and Revenue, and they have a dedicated area to handle those claims. And if you go to patreasury.gov and click on the Board of Finance and Revenue, you can find information on how to notify them of your need to get the annual exemption request form that you can complete and send in to them in order to get your reimbursement. Now I'm going to talk about the Motor Carrier Road Tax Agreement and International Fuels Tax Agreement. And I'm going to start out by saying these are a little bit different than almost any other tax that comes into play in Pennsylvania. The Motor Carrier Road Tax is imposed on qualifying motor vehicles. Think of a larger truck operated exclusively in Pennsylvania. The credential costs $12 per vehicle, and the carrier must display the non-IFTA decal on both sides of the vehicle and carry an MRC registration card, which is similar to a vehicle registration card that you would have from PennDOT. The farm truck registered vehicle bearing a farm truck plate and operated within restrictions of Vehicle Code 1344 is exempt from the requirements of the MCRT. A truck exemption from registration as a farm truck that is operated on a biannual exemption certificate as provided under Vehicle Code 1302 is also exempt from these requirements. Now, the piece on this is basically, so you have this farm truck that you are using, or let's say it's a tractor trailer and you're using it to get your product from the farm to market. So the motor carrier road tax permit is what you would need for that. You pay the $12 registration, you put the decal on the vehicle, and you don't really have to worry about a tax filing obligation because you're purchasing fuel in Pennsylvania that you've already paid the tax on. and it is staying all within Pennsylvania. However, the International Fuel Tax Agreement comes into play if the vehicle is registered and plated as a farm truck and they leave Pennsylvania. So let's say you have your farm in Harrisburg, but you're taking your products across the state lines into Maryland or into Ohio. At that point, you're going to need an IFTA decal because you're going to have to claim the mileage that you traveled in Pennsylvania and the mileage you traveled in Maryland. And then the appropriate tax is going to have to be remitted to either jurisdiction. You get a credit for the taxes you paid when you purchased the fuel, but you're going to allocate where that tax needs to go to. And if the state that one of the states you're traveling in has a higher tax rate than where you paid the tax on the fuel, you're just going to pay that difference. And the department has information available out there for this. So please keep that in mind. So the last tax I'm going to talk to you about is personal income tax. Now, Pennsylvania personal income tax is levied um, against the taxable income of a resident and non-resident individual, a stated trust partnership, S corporation, business trust, or limited liability company that is not taxed as a corporation for federal purposes. Some key points on personal income tax is it's a flat rate, 3.07%, which means that it's the same rate for all Pennsylvania taxpayers. The federal government has a scaled tax, lower rate for low income, higher rate for higher income. Pennsylvania, it's 3.07% for everyone. All businesses and entities earning $33 or more are required to file and pay personal income taxes, and businesses, even if they have a loss, are required to report so that you can show that loss to Pennsylvania. So basically, we are showing that accounting for that business's existence for tax purposes. The reporting form is the PA 40, and there are various appropriate schedules, and I'll talk about those in a couple of moments. The residency requirement in the law is met when a taxpayer is domiciled in Pennsylvania or meets the criteria of a statutory resident. And basically, a Pennsylvania resident pays tax on all the income that they earned throughout the world. Non-residents are only required to pay taxes on their Pennsylvania sourced income. Pennsylvania has 8 classifications of income, which pretty much anything you earn is going to be tucked nicely into one of these categories. First is compensation. Those are wages that you get off a W-2 or a 1099. Interest income, dividend income, the net profits, and from an operation of a business, a profession, or farm, the net gain or loss from the sale and exchange and disposition of property, net income from rental, royalties, patents, and copyrights, estate and trust income, and gambling and lottery winnings. So the operation of a business, profession, and farm, uh, that income is reported on line 4 of the PA 40 return. A farmer will usually use a PA Schedule F to report income or losses from the business that they operate as a farm. However, uh, you should look to see in determining your business activities to see whether you should use a Schedule C to claim business activities or a Schedule F to be claimed to claim as a farming. To use the Schedule F, the taxpayer must be engaged in one of the following business activities on a regular basis. Basically, they're agriculture, that is the business of processing food or other products useful or valuable growth or crops by tilling and cultivating the soil and breeding, raising, and feeding cattle, livestock, bees, poultry, and other animals that produce food that are themselves considered a food product. Horticulture, which is the production of vegetable plants, fruits, and nursery stock. Floriculture, which is the production of flowers, decorative shade trees, plant shrubs in a field nursery or in a greenhouse, dairy farming, fur ranching, and the propagation of game birds. For those last three, I'm not really going to go into a lot of a definition on those. They're defined in Pennsylvania, various Pennsylvania codes, but I think the generic description is probably enough for what you need at this moment in time. Now, another item that you may be concerned about or care about as a farmer is the income or loss from rental, royalties, patents, and copyrights. This is reported on line 6 of the PA 40 using a Schedule E. Rental income includes the amount you receive for the use or rental or rights to use your real property, and you're basically renting it out to someone else. Royalty income includes the amount you receive from the extraction of coal, oil, gas, or other minerals in place, and the amounts that you receive for use of patents, copyrights, secret processes, formulas, goodwill, trademarks, trade brands, franchises, and similar properties. So this is where you report the gross royalties from oil and gas and mineral uh, rights income that you may be receiving from the real property that you own. So oil and gas royalties, payments received for mineral rights located on the farm are also not considered farming income. So you cannot claim them on your Schedule F. That's why you have to claim those on your Schedule E. Now, what I'm going to talk to you, and I also just want to mention rental is if you are renting space, let's say bunkhouse space, I'm going to use an old term from days of watching Bonanza and other shows long ago, to your farm hands, and you're receiving that rental income, you would also report that rental income to the Commonwealth of Pennsylvania because if you're making a profit on it, you owe taxes on the profit that you are making. I think I accidentally skipped some things there. The next thing I'm going to talk about is your need to make estimated tax payments as a farmer. There are special estimated payment rules that apply to farmers. These rules applies to those that cultivate, operate, and manage a farm for profit or gain. A farm is a tract of land devoted for agricultural pasturage, stock raising, and some aligned industries. It includes dairying, stock and poultry farms. For personal income tax purposes, a taxpayer is categorized as a farmer if 2/3 or more of their gross income is derived by farming. So this means that let's say you have $50,000 of income from farming, but you have $250,000 of income that you earn as a lawyer or as a doctor. Uh, you don't classify as a farmer for estimated income tax purposes. So, because 2/3 of your gross income is not coming from the activities of farming. If categorized as a farmer, the taxpayer must make their estimated payments by January 15th of the year following um, the tax year or file their return and uh, make the entire payment of tax due on or before March 1st of the next year, unless March 1st falls on a Saturday or Sunday or holiday, in which case it is the very next day. Farmers also making their pay can also make payments like any other individual in 4 equal payments as long as the final estimated payment is made on or before January 15th and when the return is filed by March 1st. Again, the piece where the farmer can hold off making their payments until that um, March date and they can file that return is is specifically there for farmers. Now, what you need to do is if you're claiming farming and you're claiming this special privilege to pay your estimated payments differently, you're going to use the RAV 1630A underpayment of estimated payment by individual farmer. Um, you're going to use this to show how your farming income matches the 2/3 rule. You're going to do this so that um, we know that you have um, filed and made your payments by the way that you should have been. And if you do not file electronically, which I will tell you, filing and making your payments electronically is the way to go because it shows the money booked at the time when that payment is made, and you don't have to worry about did it get mailed in time? Do we have to look at the envelope for the postmark date on it? Was this filed on time? But if you do decide that you want to mail your payment in, or you want to mail your return in, we have a special address for farmers. That is PA Department of Revenue Farmer Payment, PO Box 280604, Harrisburg, PA 17128, 0604. And I would encourage you to use that as a farmer so that your return doesn't get classified as just a normal individual taxpayer's account, and that you accidentally get charged estimated underpayment penalties or late filing and payment penalties um, when your return is considered or the same as everyone else's. To make sure, other than using that address, uh, on the PA40, we have a little farmer oval to indicate that if at least 2/3 of your gross income is from farming, you will indicate that on the paper return by filling in that oval. On an electronic return, you just mark the indicator, which will take your processing of your return through the special rules so that we take everything into consideration. So, Cindy, I know we're at an hour. Um, and that was with your introduction. Do I have a few minutes to wrap up on the tips for success,
Of
or do we
course.
want this here?
Nope,
Okay.
keep going.
All right. Thank you. So we're going to cover some tips for success, and um, we just want to let you know these things because they're very important, and it's where we see many businesses fail, and we don't want to see you fail. So you got to maintain adequate records. I did not talk about payroll taxes in this. Um, we cover that in another webinar with SBDC. And if you hire people to work on your farm, we suggest that you take a look at that. Okay. Um, but one of the questions that does come up is how long should I keep my tax records for my business and personal use? So, unfortunately, there's not a clear cut 100% answer, but I'm going to go through some uh, tips that you're going to keep in mind. Most of the time, I'm going to say, if you ask me personally, it's going to be 4 years, which means the current tax year plus the three previous ones. For payroll, you're definitely going to keep 4 years worth of your tax records showing that you withheld and remitted. If you have a mortgage or a capital asset or investment income records, you're going to want to maintain those through the life of the obligation, which means the life of the mortgage. If you bought a combine and you have it, keep all your records during the entire time that you own that combine so that you have it just in case anything is asked for the depreciation that you're taking off of it or the basis in that property if and when you go to sell it. So keep that for the life of the property. Um, if you are required to collect and remit sales tax, you're going to want to keep those records for 4 years also. And if you allow a person an exemption from paying the sales tax on something, you're going to want to keep that exemption certificate with your sales tax records for that 4 year period also. Now, the Department of Revenue cannot recommend specific products to use as a tracking of your tax obligations and your finance records, but there are many products out there, and your SBDC representative may be able to help you and guide you either into software to use on your own or to local businesses that'll be available to, assist you. But one thing I want to let all of you know is that you have a tool probably in your hand right now as you're listening to me that can help you. If you own a smartphone, we recommend that you you either download a scanner app or make sure that your photo application can scan a document to PDF, and you can use that to keep copies of invoices, bills of sale, other things that you may need to turn into your accountant or your tax preparer or whomever when tax times come. It is a great little tool to have, easy to keep multiple record periods in the palm of your hand to have with you. Um, and you don't have to worry about putting receipts all over the front of your vehicle or keeping an expanded accordion folder in there to shove stuff into that you end up forgetting about. So smartphones have many options. other than, just scrolling the internet and checking out social media. On that note, Department of Revenue does have a few social media sites on LinkedIn, Facebook, and on Twitter, or now X. Please feel free to check us out. We know we're not the most fun organization, but we do post helpful tips every once in a while. If you are collecting and remitting sales tax or employer withholding taxes, as I kind of mentioned earlier, we would encourage you to have a separate bank account to hold those funds. Don't allow them to commingle with other things. We have seen situations where spouses, uh, the money gets intermixed into the generic bank account. Spouses see an amount in the account and they spend it. And then they put the business into a pickle because the money is not there in order to be remitted when the Commonwealth needs the money to be remitted to us. So please keep in mind that a separate bank account is a good thing to have in these cases. Um, Take advantage of electronic services that we offer. Our website and our MyPath page are full of various services. mypath.pa.gov, you can see a little demo on the slide here of what it looks like. There is tons of information about filing, how to file, to be able to file, make payments, check on your tax records. All kinds of information is available. We suggest you register if you have a bit for a business. If you have a business, register for your MyPath account to get set up if you have to collect and remit sales tax. If you are just an individual, uh, you can create your own personal income tax account so you can make your estimated payments with us and you can check on estimated payments. You can also file your return for free. So again, we encourage you to check that out. The other piece of information is our website. You can obtain forms and instructions. You can make a payment. There is basically all kinds of things that you can do. I'm going to talk a little bit about right now this little gray bar going down the side, which has your login for MyPath, information about filing taxes, making a payment, property tax and rebate application, if you meet the qualifications for that, and other things. Unfortunately, we could not fit them all onto the screen. So again, check out our website and see what we have. We also have thousands of frequently asked questions about taxes that are available. And when you get onto the website in that gray bar, a little bit below what I was able to show on the first slide, there's a little piece called customer service where you can get answers to the commonly asked questions. You can actually submit a question off of that to us by hitting the submit a question button, registering yourself so that we can receive that information securely and we can respond securely to you. And we have that all out there. Sorry. We have the Customer Experience Center where I work and my colleagues, Jason and Diana, who hopefully have been answering many of the questions you've been asking throughout this presentation. We are all here to help you. We have various numbers for business taxes, personal income tax, and we have a dedicated line if you need MyPath filing assistance. Those are available here, and they will be available when you get the slide information. We also have district offices throughout various parts of the state. You will see, unfortunately, we have not many offices coming through what is considered the Pennsylvania T. But you can go to visit a district office for face-to-face service with a Department of Revenue employee. Their normal operational hours are 8:30 a.m. to 5 p.m. Monday through Friday. But we do encourage you to call before you just drive to the location and stop in. Uh, there are some days that these individuals who work in these district offices are out in the field, in the community that working directly with taxpayers. So, call to make sure that there's somebody who's going to be there to be able to answer your question or assist you. We also have a voluntary disclosure program. So if during this presentation you have learned that you have a tax obligation that you forgot to file and pay or remit to the Commonwealth, You can check out our website and look for voluntary disclosure program, and it'll tell you how to basically come clean and get yourself caught up and get yourself able to get your sales tax license or whatever else that you may need as a registered business in Pennsylvania, um, to basically get everything caught up and get corrected. So the last piece I'm going to talk to you about is resources. There's a lot of information on this page. Um, this is the REV 588, which is starting a business in Pennsylvania, that has a lot of useful information if you're starting up a business. This is the use tax for businesses guide or flyer that I talked about. We have the REV 717 here. We have the REV 1729 here. And then we have the REV 4, I think it's the 415 or 413, the Employer Withholding Information Guide. All these are available on our website and have a lot of information depending on what your obligations may be. Truthfully, the Starting a Business Guide here and the uh, farming, the state and local sales tax and use tax for farmers uh, are your probably going to be some of your go-to publications that you're going to want to, save onto your browser page or something like that to have reference to. So with all of that, I am concluded with the presentation. I will say thank you to everyone, and I will see if there's any questions that my team was taking during the presentation that they want to answer live, or if there's anything else that they want to talk about.
Don, thank you. And we haven't had very many questions, so they're starting to populate a little bit into the chat box.
Okay.
So I'll just wait a minute, but I will just remind everyone that following today's webinar, I will be sending the recording, the presentation slides, the flyer for the tax series. Probably if you don't get it before the end of today, you'll get it tomorrow. It does take a little bit of time to get the recording done. And then we hope that you'll join us coming up in some of the future tax series webinars. And also, if you're looking for other specific training, I will just encourage you to mention that. You can shoot me an email. You can leave the comment in your evaluation. We do look at all of that. And we are always looking for ideas for areas that information is being requested and needed. So
All right.
looks like all the questions have been answered. So with that, Don, thank you. Appreciate your time,
No, thank
as
you, and
well
happy
as
SBDC Day.
thank you. And thank you to your team of experts. And I'm going to turn the recording off.